Hey guys, so this is the second video. This is also going to be an intro kind of video because today we'll be talking about why most of the traders fail, the beginners. Why do they fail, and how is the system designed for them to fail? Because 90% of them, we always hear that 90% of the traders who get into the market they fail. So why is it like that? So yeah, that is going to be a topic for the video, and so yeah. I guess all of us, when we started, if someone is starting right now, they think that they just need a strategy, they'll stick to it, and it'll just make them a lot of money, they'll do wonders. No, that is not going to be, that is not the case in the market. So you see, you can stick to one strategy and you see that there are people working with that strategy and it is working for them in the market. But what you don't see is the amount of practice, is the amount of time, the amount of chart reading, the amount of back testing they've been doing, the amount of time they've put in to try and tweak that strategy according to their own style. You do not watch that. You just say that this strategy, we name it. Like if we're talking about options and derivatives, we go for an option selling like iron condor or iron fly. We just stick to the very concepts of having a very stiff strategy, but that won't work in the market. Not for everyone. A strategy should and must be tweaked by you as per your own style. So if strategy is not something that is going to make you profitable, what is going to, would it be the indicators? No, the indicators won't suffice for something as crucial as risk management and discipline and your psychology. So what do I mean when I say that, oh, risk management is very important? You see, risk management, what do I mean by it? Risk management is how much capital do you have, and how much margin are you using from that capital to get into a trade, and how much are you risking on every trade for a specific target that you're putting. So according to the target, how much are you risking? That is what risk management is. So uh, we've heard everywhere that, oh, you should be risking 1 to 3% of your capital on a trade, or even for a day the max you should be risking is 1 to 3%. You can do 1%, 2%, or 3% according to your risk appetite that I said yesterday. So yeah, so risk management, yeah, we've all, heard of the concept of RR, risk reward, that, oh, you should at least have an RR of like 1 to 2, 1 is to 2, or 1 is to 3. But I'll tell you honestly, if your strategy, if your tweaked strategy that you've developed over time for yourself, if that works, and if that works 50% of the time, and you have an RR of 1 is to 1.5, you would still be making money, you would still be profitable. So how is it that, even if you're correct for 50% of the time, and you'd still be making money if your RR is 1 is to 1.5, you'd make decent amount of money, you'd make a living out of it. You won't make huge sums of money, but yeah, you will be profitable. That is how risk management comes into the play. So yeah, what is the next reason we can think of, why people fail? The real reason, what I say, would be they do not know why is the price moving. Let's say we're talking about gold. If we are to trade gold, I wouldn't say that, oh, this is the support that I drew on the chart and it'll hit this level of, let's say, a round level of 4400. Gold is trading right now at 45, 50 something. odd levels of 45.50. So if you have to say that, oh, if it hits 44.50, I'll just buy it there. It hits the support and I'll sell it when it hits 44.80. No, why would you think that it'll hit the support and it goes back to 44.80 or 90? Why is what is the reason? Did you read something? Did you study? Did you analyze gold or any instrument? It has a lot of things backing it, it has a lot of things blocking it. So if we talk about gold, we have to see how is USD doing, how is the rest of the currencies doing, how are the stock markets of the world doing, how are the other metals doing, how are the other commodities doing, what is the next possible data release coming from the Fed meetings, or the minutes of FOMC meetings, when are they coming. So we have to look at a lot of things, at least half a dozen things, before we think of making a bias for the day or for the week. So yeah, that, and obviously the geopolitical tensions, or the deals that are happening, the tariffs that are being put on the trade war that is going on. So we have to look at a lot of things before making a bias for ourselves. So yeah, those are the reasons that are pushing the prices of any instrument. We cannot say that, oh, this is support, it'll just hit that point and it'll go up from there. No, that is not how you do trade. That is not how you trade. You do not trade basically on technicals. You have to know the fundamentals before you get into a trade. So yeah, that, and then what else? The biggest role in any trade, when you're into one, like when you're in a trade, uh, the biggest thing that would make you profitable or make you lose money is your psychology, is your patience, is your time that you've spent on the charts. So when I talk about psychology, what is the psychology that a lot of people you might hear saying, oh, if your psychology is strong enough, you will just make money in the market. So what is it? Psychology is sticking to your risk management no matter what happens. And risk management, there's this very strong saying that draw your stop losses with ink and your targets with pencil. So stop loss that you're putting, it should be very very justified. It should be non-negotiable. You should not be changing it with every single move. You shouldn't be dragging it down or dragging it up because you think, oh, it might go a little down and then it'll retrace. No, that should not be the case. If you put a stop loss, have faith in your setup, have faith in your trade. That is what you got to do. So yeah, that, and then you have to have the patience. You have to let the trade breathe. You have to let it go to the levels that you're wishing it, that you're planning it to go, which is not the case in trading. So yeah, that you're planning that will go there, and the way that you have put your targets, that this is going to be my first target, the second and third. Third is a rare case, but yeah, it will go there at times. So yeah, so that, and then what else is the case leading to losses for beginners, at least? I would say over trading. They basically want to be in a trade at all times. That, oh, I'm getting bored. I'll just open the market and, oh, I would just get into a trade even when there are no clear signs that there's even a trade building up there. So yeah, over trading and then trying to make back your losses. No, revenge trading, never. Revenge trading would blow up your account so fast that you won't even know. Revenge trading is the most biggest rival, the biggest rival that you'll face in trading, revenge trading. The moment you think that you are bigger than the market, you start losing. You are nothing in front of the market. Market any market, stock market, forex market, commodities. We guys, we don't even have an idea the amount of money that is flowing in every single moment, every single second, the amount of trades that are being pushed. So yeah, we are basically nothing compared to the volumes that are being played by the big players. So yeah, you're not bigger than the market. You'll never be. No one is. So yeah, revenge trading against the market is just a foolish game. That and then basically those were the main reasons that you lose money in the market when you're beginning as a trader. Risk management, psychology, and your discipline and your patience. You have to be patient for letting the trade to play out. You have to be very stern with your risk management. You do not move your stop losses. But yeah, risk management also means that you move your stop losses as you are deep into profits. You would make it, you would bring up your stop loss to your break even point when you have achieved your first target, and then you move it to the first target when you have achieved your second target. The collective sense of it all is called risk management, not just that you've placed a stop loss and you've played a target. No, that is not risk management at all. Risk management is position sizing, your stop losses, and then your trailing stop losses. That is what real risk management looks like. So yeah, that was all about the video. I hope you guys learned something out of it. I'll just make a series of these videos that I'll start from very basic, what to do, what not to do, and what are the reasons behind all the concepts that you're learning about, or the concept that you're listening about from everywhere around. I'll tell you the books that you should be reading. I'll tell you the activities that you should be getting into. I'll tell you about the news outlet that you should be reading. I'll tell you everything about trading that I know and I follow every single day. So that was the video. Thank you so much. Good luck. See you soon. Bye.